Whenever I open the chart, the first thing I do is to apply a proper top-down analysis, and this has helped me to be able to master the market and understand directional bias. So in today's session, I'm going to show you guys how to apply a proper top-down analysis in your setup or in your charts. So without delay, let's get straight into the session. Top-down analysis is the professional and accurate way to combine time frames to build a stronger directional bias. Each time frame has its own structure, so it is very important to know this. So each of those time frame has their own structure in the market, and that has been simplified here. And if you are very conversant with my videos, I've spoken about this earlier. I've spoken about the basics. So today we are going to be going more advanced. Now we have different structure or different time frame structure. So the first one is the external. So the first one is the external time frame structure. We have the internal time frame structure, and we have the current time frame structure. So this is how I categorize my time frame structure, and they represent different functions. So for the external time frame, we have the higher time frame, which can start from week 1, day 1, or 4 hours, depending on the kind of trader you are. We have the internal time frame. This is the middle time frame structure, and this can start from 2 hours, 1 hour. And for this is the higher time frame structure. The external time frame represents the higher time frame structure, which is the directional bias time frame. So this gives you the heads up, like the overall direction in which the market is heading, either bullish or bearish. And for this is the middle time frame structure. This talks about the point of interest structure. Either or you can call this point of interest, you can also call it your area of interest, you can name it any name. So don't get confused when other traders call it another name. So this is your point of interest structure. That is the middle time frame structure, and this can be 2 hours, 1 hour. For the current time frame structure, we have the lower time frame starting from 30 minutes, 15 minutes, or 5 minutes, and it can go as 3 minutes, 1 minute, depending on the asset that you trade. If you trade gold, then you can go as low as 1 minute. But for major assets like GU, EU, GPP, USD, and the rest, I'll recommend you stick to 5 minutes or 15 minutes list, because going to lower time frame as 1-2 minutes is literally noise. They mostly don't hold. Now this is how the market moves. Markets is always giving series of higher highs and higher lows in a bullish trend, series of lower highs and lower lows in a bearish trend. So I'm going to be using this bullish trend as an illustration, and if you are finding difficult to understand this, so you can make reference to my videos on market structure or technical analysis to understand the basics of market structure, and also to understand why prices are moving this way. So that's that for that. Moving on, this is a bullish structure, and this is how markets move, but it's not always this simple. And this is what you must have come across online. Most times you must have seen things like this. The market is always creating series of lower highs and lower lows, or higher highs and higher lows in this case. But it's not this always simple. It's way more complicated than this. So this is just a basic market structure, and this is on the advanced side. And these two structure you are seeing here, they are literally the same thing. So let me take this one out of the picture first. So they are literally the same structure. And what you are seeing here is why they said market structure is fractal. And what do they mean by fractal? Fractal means structure inside of a structure. So that is where top-down analysis comes in. So when you go to different time frame, when you navigate to different time frame, you start seeing more structures inside structures. So that is why they said market structure is fractal. So each time frame represents different structure. So that is why it is very important to understand how to read structure and how to read structure with top-down analysis or directional bias or whatsoever you can call it. So now what you are seeing here is literally a pullback. What happened from here to here is a pullback, and this can be a full body candle on the higher time frame. What you are seeing here might be like 2 or 3 candles, 2 big candles on a higher time frame. Like this is the higher time frame, this external structure. So it can be a full body, like a full giant candles, like 3 or 4 of them. But if you navigate to lower time frame, let's say you navigate to 2 hours or 1 hour, this is what likely you are going to be seeing. You are going to be seeing a series of lower highs and lower lows, a structural like movement. So what you are seeing here is the same thing what we are having here. So let me try to draw that and highlight it. So this is it. What you are seeing here, they move from this swing high to this swing low, or better still from this higher high to this higher low is the same thing as this. Is the same thing as this thing here. Now, what we are seeing, the price is giving us series of lower highs and lower lows, lower highs and lower lows. Before we had an internal shift to the upside, continuing the trend in a bullish way. So what happens there now? Most times you might not be able to see this if you are on a higher time frame bias, if you are on week 1 or the 1 or 4 hours. This is what is going to be showing you. So that is the essence of navigating to lower time frame, so that you can see, you can read into the recent structure, you can read into what the market is saying at that point in time, right? And now we'll be able to get this because of the help of what? The internal structure. And at the end of the day, price continue moving to the upside, created another series of lower highs and lower lows before it's continuing with the major trend, which is what? A bullish structure. So what is happening in within this space, in within these zones, is what? They are the internal structures. The internal structures. What happens within there? And now, how will you be able to know the internal structures? One thing you need to put into consideration to know if that particular zone is an internal structure is, we have two key words, two key stuff you need to put into consideration. We have the swing highs and the swing lows. So in this case, this is a swing high and this is a swing low. The swing low and the swing high. That's one of the things you need to put into consideration. And aside that, you also need to understand how to navigate. Your point of view matters. What you are viewing at that moment or at that point in time. And make sure you watch this video to the end. I'm still going to show you this whole thing on the live chat. So now we'll be able to see the swing high and the swing low. And remember, the market started from this low. And now one thing you should also know, that market is always giving two sides. There's only two sides to the market. We have the right side and we have the left side. So let's say the price was previously bearish. Price was previously giving us something like this. Something like this. Before we started pushing to the upside. So this is the left side of the market and this is the right side of the market. So always see it this way. Now price continuing to the what? Price shifted to the upside. Previously it was bearish, now we are bullish. Now what you are seeing here, they are the internal structures, and this is the swing high and this is the swing low. So whatever that is happening within the swing high or the swing low, that is the higher high or the higher low in this case, is the whatever that is happening within them is the internal structure before price eventually continue to the upside to create a new swing high and a new swing low. So it is very important to always understand this, because this is where a lot of trader get it wrong. So probably when price take out this low, because there's a particular low here, they'll start calling this place a shift. This can literally be a shift on a lower time frame, a lower time frame shift, but it is not the major shift. So it's until price take out this swing low, that is when you can now see we're having a major shift, but price hasn't taken it. So what happens here is just an internal low. That is not the major low. So now it's until price take out this low, because price is still this range. Let me call this range or this structure is still within this swing low and this swing high. So automatically this is an internal structure. And now price created a new swing low. And before you can call this place a swing low, price has to take out this high to create another swing high. And this is where we have our break of structure. Then we are having what? A new swing low. So whatsoever that happens within this place, and this is where we call the discount zone. So whatsoever that happens within this place is what? The internal structure. Until price take out this low before you can now say we're having what? A shift. And it has to be a full body break, not a sweep. That is where traders make a mistake also. They confuse a sweep to a break. I'm still going to show that on the live chat. And now remember that all these whole things, there are two things you need to put into consideration. You need to navigate on the charts on your time frame. So that's where your POV comes in, and that's where your time frame comes in. So here are the list of time frame I use. I use week 1, day 1, 4 hours, 2 hours, 1 hour, 45 minutes, 30 minutes, 15 minutes, 5 minutes, 1 minute. And this 1 minute I use this on good. So this is my time frame. These are the time frame I use. and they serve different functions or different purposes. Just like I stated there, the 4 hours, the day one, the week one is for the overall directional bias of the market. And this is an example. Starting from this lowest low to this highest high, this is the directional bias. So the directional bias is clearly bullish. So now for the internal structure, whatsoever that is happening within the swing low or the swing high, they are the internal structure. So let's say price decided to do something like this. Price decided to start creating a new series of lower highs or lower lows. So in this case, let's say price decided to start creating a new series of lower high, lower low. So now this is just a pullback. This is not a reversal. So there's a difference between a reversal and there's a difference between a pullback. So this is literally what a pullback, and this is an internal structure because it still falls under the swing low and the swing high. So you have to wait for price to take out this low before you can now say we're having what a proper shift or a reversal. So that's the thing. And you need to navigate two different time frames to be able to see this whole thing, because what you are seeing here, let's say this particular structure is on 1 hour time frame. But if you go to maybe like day one time frame, this is going to be just a one candle or something, or two candles. You won't be able to see it in a structural like move. That is where top down analysis comes in. And remember that you need to know how to navigate the proper way, because sometimes you might be viewing a yearly worth of data or monthly data. Let's say, for example, I'm not focusing on the most recent part of the chart when I'm back testing or when I'm forward testing. That is where some traders make the mistake. So you need to focus on the most recent so that you can get out, so that you can get the right entry. And remember that your form of trading or your kind of trader you are will also determine how you analyze the market. Either you're a scalper, day trader, or what's it called, a position trader. So that will determine how you analyze the market. But regardless of the kind of trader you are, try as much as possible to always do a proper top down analysis starting from the higher time frame. And most times, market tends to respect the higher time frame bias compared to the lower time frame bias. And at the end of the day, the lower time frame is full of noise. So that's the thing. And one thing you should also always do is that make sure that your entry time frame is in alignment with the overall time frame. So there are some scenario whereby the overall time frame will be the same thing with the internal time frame, and it has to be the same thing with the entry time frame too. So let's say, for example, in this case, this first structure here, starting from this swing low to this swing high, is the external structure. This pullback is the internal structure. So this pullback is not in alignment with this external structure. So you have to wait for a proper shift before you can make any decision. So you have to wait for a confirmation that we are done with this bearish trend, which is the temporary trend or the pullback. So before you can make any trading decision. So now let's say price decided to come down to this level. So you have to wait for price to take out this high, and we are within the discount zone. So this is the what's it called, the swing low. So our buying position is around this place, but before you can take any buy, you have to wait for a confirmation. So you have to wait for price to take out this high, which is the internal high or the internal lower high. So you have to wait for price to do something like this, take out this high, then wait for a pullback. Then you cannot set your entry within this zone depending on your entry model. So then you can now target the next what's it called, the next high whatsoever, depending on your exit model. So you should have an entry model and also an exit model. So I'm still going to discuss all these other things on this channel. So make sure you subscribe to this channel to get more of this educational content. So now moving on, this shift and this pullback is going to be our entry level. So now it's not in alignment with the overall structure. So at the end of the day, that is how to what's it called, trade with the trend. So that's it. And you should also understand a continuation and a what's it called, a reversal. So break of structure represents a continuation, change of character represents a reversal. So now let's go into the charts and see this for ourselves. So now we are on the charts. So I'll be focusing on this portion of the charts, on this part of the chart. So let me try to cut off this other part of the chart. So that is going to be my major focus. So let's focus on this part of the chart. So you might be wondering that why am I partitioning the chart into two categories? So this is the proper way to do a proper top-down analysis. And top-down analysis also comes with your navigation, how you navigate on the chart. So this first portion of the chart is the left side, while this is the right side. So this represents the past and this represents the present. So always try to look at the charts this way so that you can know where the chart has been, where the chart is coming from, and where the chart is heading to. Now, previously, this is the previous, we are what? Bearish. So price started giving us series of lower highs and lower lows before we had a shift to the upside there, and I think the shift is somewhere around here. So this is where the shift happens. So we had a shift here, then price started giving us series of higher highs and higher lows, higher highs and higher lows. So we are now bullish. So the present trend is bullish. So the external trend is bullish in this case. So this is our external trend, and this is the previous trend. So we do not have any business with this anymore. Only if you want to backtest this portion of the chart. So this is where we'll be focusing on. So this is our present trend, and it is obviously bullish. Starting from this swing low to this swing high, it is bullish. Now I'm currently on day one time frame. So if I'm to go to week one time frame, this is what we are going to be seeing. And now, when I talked about POV or how to navigate, as you can see, price is giving me other side of the chart. See, can you see? It's giving me this part of the chart, so I don't want to see this part of the chart. So this is where I want to focus on, and then I can literally zoom in to that side of the chart. So I don't have any issue. I don't have any business with that other part of the chart, and that is where a lot of beginners make confuse themselves. And the essence of time or what's it called, the essence of time frame sometimes is just to like see more into what the candle is doing, because each time frame you're on represents the duration that candle lasted for. So now, for example, this is week one. Each of this candle lasted for 1 week, and we can't see much into this candle. That is why we need to navigate to the lower time frame. Now on the week one time frame we are still bullish, on the day one time frame we are still bullish regardless. So now back to the day one. So price has been giving us series of higher highs and higher lows, higher highs and higher lows. Now this is where the current price is. This is where the current price is. So anything within this current price is going to represent our current trend or our internal trend. And starting from year to year, let me try to label that. Starting from this swing low to this swing high represent our external trend, which is the overall trend. So anything within this place is our what? Our internal trend. So the internal trend is still bullish in this case. So the internal trend is within, this is the internal trend here. So for us to know the current trend or where to take our entry from, we need to navigate to the lower time frame. And when we are doing that, all these other things are going to disappear. And now, before I go into that, there are some things I would love to explain here. And this is where a lot of traders makes mistakes. Now, if you take a closer look at this part of the chart, price gave us let me start from here. Price gave us this lower higher low, give us this higher high, give us this higher low, then give us this higher high, higher low, then higher high, higher low, and price keep on going like that, like that. Now, let me take this out of the way. If we take a closer look at this side of the chart, this is there's a break of structure here coming. Let me try to zoom into that part of the chart. So now there's a break of structure that happens there, and another break of structure happens here. And this is where a lot of traders make this mistake. They mostly make a mistake of confusing a pullback for a reversal. This is the last break of structure before price moved this up and came down. Now, here's where a lot of traders will make this mistake. They will call this place a shift. They will call that place a shift. which is not in any way valid. That is not a shift. That is not a proper shift or a reversal. That is literally a pullback. Number one reason why you can't call this space a reversal is because price hasn't taken out this major low, and this is the major low here, the swing low. I'm coming, let me label that. So price hasn't taken out this major low yet. So this is just an internal structure. This is just a pullback, a temporary trend or a pullback. This is not a proper shift because price didn't take out the major low. Price has already created what a major high also, which is around this place. And price didn't what create a new one. Price dropped down to the downside. And this is the last break of structure. So automatically, this is the protected low. So this is our swing low, and price hasn't taken it out. So what happens there is just a pullback. So assuming there was a break of structure here, then price came down, went up, then came back again. Something like this. Let's say we had something like this. Price came down, gave us a proper break of structure, then came down, then that's when you can now call this place your swing low, because that's a new swing low. A new swing low has been created. But in this case, price into that. Price was price only pull back to the downside. And this is a major low. And now this is where it also gets tricky. Price only swept this low. Price didn't break through it. Because if you take a closer look at this part of the charts, let me try to zoom in. Now, taking a proper look at this portion of the chart, price didn't break this low, which is our major low. Price never to take it out. This is just a liquidity sweep. Price only swept that place, then started pushing to the upside. Assuming we had a full body candle closing below this low, let's say there was a full body candle like something like this, and then follow with a break of structure. That is when you can now say we are having a major break, or sorry, a trend reversal in this case, starting from like this is the left side and this is the right side in this case. So that's when you can now say we are having what a proper trend reversal, a valid trend reversal. But in this case, price didn't take out this major low, and price only swept it. Price includes below it, and there was no even a break of structure after the change of character to confirm that we are having a trend continuation of that new trend that is just being formed. So you can't call this a what was it called? You can't call this a shift. This is just a pullback. So that is where a lot of traders get it wrong. That is why navigation is very important, and that is why top-down analysis is also very important. And now, if you take a closer look at this, price also did the same thing there, created a new high, break this high rather. So this is our new break of structure. Now this place is going to be our protected low, our swing low for this part of the chart. Then price went up to create another one. Then that's how price has been moving and moving and moving. Now there's something that happens here that will mostly make a lot of traders lose money, even both the pro trader or intermediate trader or beginner trader. Now price take out this low, which is a major low. So most people would think this is a proper break, but unfortunately, this is just a fake out, and this is as a result of NFP. If you take a look at this, that is Friday, 4th of 2025. So that was NFP. So what happens there was just a fake move. It's as a result of NFP. So the price is still bullish regardless. So these are the things you need to watch out for. These are the things you need to like learn, and that's why it is very important to always backtest. So the more you backtest, the better you get to experience the market. So what happened here is not a major break. This is not a break. This is as a result of NFP, and that was why the price keep moving to the upside. So that's the thing. Now, this is where I want us to focus on. All these other things here are just mainly backtesting. They are just backtesting. So now we'll be able to know that this is a bullish structure on the external time frame. Starting from this, remember, starting from this swing low, now we are currently at this swing high. So now let's focus on the most recent, and the most recent is going to be around, this is most recent in this case. So now I'm going to navigate back to I'm going to navigate to 4 hours time frame to see more into what the candles are doing here. And remember that ever since I've been doing, like, showing you guys all what happens there, I haven't changed the time frame. So you need to take a proper look. So, and this is just back testing. This is not me looking for setup. This is just barely back testing. So if I was to be looking for setup, I would have left all these holes, please, and focus on the most recent part of the market. But before I do that, you have to back test. You have to look into what the market has done before, or better still, if you've done that earlier, then you can just focus on the most recent place in the market. So now let's navigate to 4 hours time frame. Now this is 4 hours time frame, and this is what the market is looking like. So on the 4 hours time frame, we are seeing alignment with the overall trend. Now on the internal structure, before this internal structure happens, there was the external structure, and this is the most recent part of the external structure. And remember, we are viewing from the one time frame earlier, but now I'm 4 hours, so the rest of the charts might not be showing on the screen. So let's focus on the most recent. Now when price gave us this higher high here, then price dropped to the downside to give us this higher low. So this is the most recent higher high and the most recent higher low. So what happens inside of this is the internal structure. Like now, this is the past internal structure. Let me call this the past internal structure, or better still, let me call this the internal structure and call this the current structure. There's always a context to this. How you are reading the chart matters a lot. So now we can call this the current trend, and we can also call this the internal trend, and where we are coming from as the external trend. So the internal trend is the bearish structure and price shifted structure here. This is where we had the shift to give us this current structure. Then this is the past structure with the internal structure. So now this is now in alignment with the external structure. So we are bullish here. We are also bullish on the external structure. But the internal structure is the temporary structure that gives us this pullback. Price took out this high and started moving in alignment with the overall time frame, which is the external structure. So that is how to read the structure properly. You can keep on navigating and navigating. Now remember that point of view matters. So what has been showing you guys so far is this analysis or this back testing I'm doing is more of a kind of a swing position trading or on swing trading. That's the thing. So if you're a day trader, you have to focus on the most recent data. So let's say you're a day trader, then I can literally just focus only on this portion of the chart and leave the rest of that other part of the chart. So that's the thing. So your point of view matters a lot. So your point of view will determine what's when you need to get out of the trade and when you need to enter the trade. So now if you take a look at this is literally like, let's say we are focusing on this part of the chart. This is June, and this is what um July. So that is literally 2 months of data, or no, or more than 1 month of data. So that's the thing. If I'm to focus on this part of the chart, so what I just did is just to show you guys how structure move, how the nature of market structure being fractal. So when you are looking out for setup, you need to focus on the most recent so that you can see opportunities in the market. That's just the thing. You need to focus on the most recent part of the market. And now if you were to keep on with this, price was eventually took out our major swing low. This is it here. For me. So price took out this major swing low. Yeah. So that is our shifts, our major shift. So price has taken out this major swing low. Then can you see price started dropping to the downside and selling from there. I'm coming. So price started was selling. So price took out this swing low, then pull back, pull back to the upside, then keep on dropping. And remember this, like I said earlier, always look out for break of structure for confirmation or for trend continuation to confirm if it's actually a pullback or reversal. So we had a break of structure here to confirm the continuation of the trend. Our price dropped before we had this pullback, and the price literally came to tap into this point of interest here, then push to the downside, drop to the downside rather. So this is literally this setup or this analysis I'm doing is for position trader. So that is why I'm still on the 4 hours time frame. And so far, this is me showing you guys the fractalization of what's it called, of how the markets move. So assuming I want to utilize the rest of this time frame, I have to focus on the most recent, a particular portion of the chart, like a very small portion of the charts, for me to be able to do that, or focus on the most recent, or focus on where the current market price is, or cut out a particular portion of the chart and start navigating deep into that portion of the chart. And that has to be like maybe like a week data, data in the sense that the market, or a month data, not like a month, or not like month full of data, rather like the one we are doing presently, this back testing we are doing. If we were to look at where the chart started from, this is January and this is July, so this is month worth of data. So if I'm to be looking for setup, I won't be doing it this way. So this is just for you to practice how markets moves, the fractalization of the market, and how to understand directional bias, or how to know when the market is really headed to. So that's the thing. So now if I'm to move to the next time frame, 2 hours or something, at the end of the day, all this whole thing is not going to be visible anymore. So what I just did is literally me analyzing a position kind of trading. That's the thing. So I can't go further to 30 minutes or something. It will start showing, a lot of things will start disappearing from the chart. So that is why it is very important to know how to like have a proper POV, or have a proper point of view or something, or know where to start your analysis from. That's another thing, because I can't navigate to 15 minutes anymore, 30 minutes anymore. So what I just did is literally for position traders. So what I did now, if I'm to align it with what I just showed you guys, which is the 3 time frame structure, the external, the internal, and the current, then this time frame are not going to be valid. So literally I have to start from 1 month or like 2 months. Then the 2 months is going to represent the external time frame. The what's it called? The 1 month is going to represent the 2 month, and the 1 month is going to represent the external time frame. The week one, day one is going to represent the internal time frame, while 4 hours, 2 hours is going to represent the current time frame. And that is going to be for a position trader. And this is going to take you weeks before you can see setups. That's the thing. To take you weeks before you can see setup and all that. So you need to what? If you are a day trader or inter-trade day trader, if you are a day trader or you are a scalper, you need to like focus on look for the most recent, or look for a little chunk of data on the chart. So in this case, if I'm to do that, I wouldn't be focusing largely on that portion of the chart. I will likely just pick, let's say for example, I can just pick this part, then start backtesting this part. I will leave the broader view. So that's the thing. So let's look out for an example here, which is on the most recent chart. So I'm going to be focused on this portion of the chart. So let's do that. So now this is what we are viewing at the moment. So this is a very recent data, and this data is literally just a 1 month data. So if you are a day trader or a scalper, or you are a swing trader, your POV should be in this way. And this is 4 hours, so you have to start from day one. Let's start from day one. So on the day one, this is what is going to be showing us. So now let's put the chart into two categories. Now on this left side of the chart, this is what's previously bearish, and on this right side of the chart, this is what's a bullish trend. So we'll be able to like position that chart, and this is where we had a shift to the upside and price push to the upside. Now this is where the market is at. So let's leave this part of the chart and zoom into this part of the chart. And this is what we are seeing at the moment. This is what we are seeing. Now, this is going to be the internal trend. Sorry. Now, this is going to be the external structure. So let me try to clear this, put out these boxes. So this move, according to what I just explained, this move here is going to be our what? Our external structure based on this view. And now we need to what? Navigate to the next time frame, which is 4 hours, to see these candles more clearly. They are literally just too big, so we need to go to the 4 hours time frame to see them more clearly. Now this is 4 hours time frame. Now this is what we are seeing at the moment. So now this is our 4 hours time frame. Now we can see the charts more clearly compared to before. And this is where we had a shift. I'm coming. This is where we had a shift. There was a shift here. The price started giving us series of higher highs and higher lows. So let's liberate that. So let me call this place is our higher high, higher low. There's an higher high here, higher low here. Then this place, higher high, higher low, higher high, higher low, higher high. So this is our higher high. So this is a swing low and a swing high. So now if you take a closer look at this part of the chart, price took out this low and automatically that is a shift. Price has taken out this major low, this that our swing low. So we are having a shift. So this is our major structure. Yeah, starting from this swing low to this swing high is our major structure, our external structure. So remember we are seeing on the 4 hours time frame. So this is our what? Our external structure. Now, what happens within this place? What is literally happening at the moment is the internal structure. The internal structure. So now the internal structure has shifted. It has broken this what's it called? This swing low. So automatically we are shifted structure from the external, which is bullish before. Now we are bearish. So we are no more bullish. So our major focus now will now be here. So now the new external structure now is now bearish. We are no more bullish. And there was a break of structure to confirm the continuation of this structure. So now we have this is now going to be our this is now going to be the past. That is the left side of the chart, and this is going to be the present part of the chart. Can you see that? So that is how to analyze the market. This is how I analyze the markets personally. So you can literally put out different approach. So this is the simplest way I analyze the market. So now price has taken out this low. So this is going to be our major structure. So and this is where the current price is. So now the external structure is saying bearish. Then what are we going to be looking out for? We are going to be looking out for selling opportunities. So we do not have any business with this portion of the chart anymore. Then this is where we are focusing on. So let me clear all this whole thing out. Then once you be able to figure that out on the higher time frame, then you can now start looking for entry opportunities on the lower time frame, which is the 1 hour or 2 hours. So let's go to 2 hours. So now we are currently on 2 hours time frame, and this is what we are seeing at the moment. We are currently on 2 hours time frame. So we can start analyzing the market from here also, like putting our what's it called, our parameters. Okay, this is a break of structure, break of structure, break of structure, break of structure. So now, and remember, if you were to be viewing it from the higher time frame perspective, this place is going to be a shift, like a shift. This is where the shift happens, somewhere here, yeah, here. So let me try to put that back. So that is a shift. So this is where the shift happens. But now in this case, there's no break of structure yet after the shift. But there are literally internal break of structures that happens within this space. So for this, for that view, for the view we are coming from, we do not have any shift yet. Sorry, we do not have any break of structure yet to confirm that this is in trend continuation. This is what a fully bearish structure. But still, we can still look out for sell opportunity here. If price now this space is going to be our break of structure, which is the internal break of structure. Now you can literally look out for sell opportunity here, but with confirmation, you have to wait for a confirmation. When price literally do something like this, price will come, then price might start creating something like this. So you have to wait for price to take out, to shift to the downside before you can take any sell opportunities. And other things you need to put into consideration like liquidity and the rest. So you can't just do anything yet. That's the thing. But if price could do something like this, price create a new high, comes down, then this place is going to be our break of structure, confirming that we are in trend continuation, that this trend is here to stay. Because there are some scenario which I've shown you guys in the past. There are some scenario whereby price will start moving to the upside again. Because if you literally go to, like, let's say we go to let's even go to weekly time frame, this might be a sweep, not a full body candle closing below that low. So now this is week 1 time frame. Let me try to adjust the chart. So on week 1 time frame, it's literally a break. So that is not a sweep, it's a break. Now let me go to day 1 to see that more clearly also. And remember, this is a change of character here. So that is a full body candle closing below that low. So literally that is a break. That is not a sweep. So let me go back to 4 hours and see it more again. So we've confirmed the break. So now what we are looking for is a break of structure to also confirm that the trend is continuing. But with the two things, there's already two confirmation, a full body candle closing below that low, and what's it called, a shift. So the break of structure is just a bonus. If it happens, fine. If it doesn't happen, and if it doesn't happen, but you still need to look for confirmation entry before you can take any sell from here. So that's the thing. Don't just take any sell from here, because price can still start dipping deep into this part of the charts. So that's one thing you should know before taking any entry. So now this is our current time. Sorry, this is our external structure. Now, if we were to be looking for any internal structure, it's going to be somewhere here. So let's go to 1 hour. Let me try to play all this whole thing out. So this is the what was it called? So this is the current structure or the internal structure. So the internal structure is a bit choppy at the moment. It's just choppy. The markets, or better say, the current place the market is. So in this case, the current the internal structure, the current structure in this case, we can literally combine the two as one, two in one. So the current or the internal structure is just choppy. So market is just consolidating. So we need to wait for market to create either a new swing high or a swing low or something before we can know what to do next. So at this moment, this is a point of indecision. There's nothing you can do here until price print any series of major highs or major lows, or when price probably pullbacks. That's when you can now say, okay, well, let's the next thing to do. So price could literally do two things. So price could do something like this, give us a pullback to this zone, then comes back, give us a new break of structure. So you can literally look for a sell here with a confirmative entry, then you sell from here. Or better still, you can wait for price to take out this low, this new low that is here. If price go up, because if price go up, this place is going to be the new low. then you can start looking for sell opportunity. Or better still, let's look out for an example on the charts on one particular one that's literally play out before. So let me zoom out. So now if we're to be looking at this, this is an example here. This is an example. Price started giving us, if we're to be, if I'm to look at this, if I'm to use this portion of the chart to explain the top down analysis or the top down analysis structure. So this space is the bullish, this is the past, and this is the present. So start price started giving us a series of lower highs and lower lows, lower highs and lower lows. Now price give us this breakout structure here, give us this pullback. So this is the external. So this pullback here is the internal in this case. This pullbacks that happens here is the internal. Then price came to tap into a particular point of interest here, then it drops to the downside. So whatsoever that happens within this place, within this your point of entry is your current time frame at that moment. So you use the current time frame to what, to sell in this case. But now let's say price is still within this place. Let's say price is still pulling to the upside and you are now looking for opportunities here. This is a trap. This is you counter trading. So if you did, there are some traders that will take the buy, which is good, but still is for, if you are not an experienced trader yet, I'll recommend you stay away from counter trend trading because the win rate is very low if you are not experienced. So what happens here is just a pullback because the major trend still stand, which is what, bearish. In this case, if we're to be looking at it from this point of view, right? And remember, I said the kind of trader will determine your point of view, either a scalper day trading or a position trade. Right? So that is what will determine how you are seeing the chart or your point of view. So now we are having a new point of view outside the one we are having earlier. We are having a new point of view. So the new point of view now, if I'm to analyze it, so this is going to be the change of character. And this is a failure swing change of character. So price took out this low, then started was printing series of lower highs and lower lows. So this is the confirmation for the trend continuation. So this is a shift, and this is a break of structure, another break of structure. Now price gave all this pullback. So this pullback is the internal. Your entry zone is your current trend. That's where you took the sell from. So if you were to navigate lower, there is going to be an internal shift here that's make and the sellers to push price down to this downside. So whatsoever you do here is just like you counter trending. If you are taking this buy, it's just a temporary buy. So you are going against the trend. So taking a sell here is safe because the overall trend in this case is bearish. That's the thing. So now let's go to 45 minutes or 30 minutes time frame to see what happens around this place. So on 30 minutes time frame, this is what we are seeing. Let me try to clear this out. So on 30 minutes time frame, price give us this. This is the temporary pullback, as you can see. So price tap into, there's a particular point of interest here, then price started what's moving to the downside. So if you navigate closer to this place is the internal. So there's a current structure here. There's a current structure here. Now, if we're to be looking at the chart from this perspective, price came to take out this low, this internal low. That's the thing. That's the word shift. So if you're an experienced trader, there's literally another internal structure here, and that will be on the 15-minute time frame. So there are some people that will literally take this early sell entry. Like me, with my experience, I can literally take a sell entry from here. But I missed out this entry that day. I didn't take it. I was not active. So there's something I'll literally look out for to take a sell entry from, although not from here, but from somewhere around there. So this is where I'll be taking the entry from. So this is the confirmation for me to take the entry. and this will be on the lower time frame, because what happens within this place to this place is also an internal structure depending on your perspective. So I can literally take a sell from here. But if you haven't mastered the market yet, so I would suggest you just stay away from this kind of setup and just focus on the basics. I mean, focus on how I'm explaining it so far. So now, price took out this low. Can you remember? This is our major low. So price took it out. So automatically we've shifted structure to the downside. So that place is our change of character. So that is our change of character for this internal structure. So now this is our current structure. So the current structure is now bearish, which is in alignment with the overall structure. So then you can now start looking for sell opportunity, and which I think price eventually did. So price give us this break of structure here, giving us what a confirmation for trend continuation. And there was a point of interest here. So this is a point of interest, and price came to tap into that point of interest, and price started dropping to the downside. And this is our liquidity. There's a liquidity here, liquidity zone here, and price started dropping to the downside. I'm still going to talk more about entry and everything on my strategies class. So this is just a top-down analysis. And now remember, we are on 30 minutes time frame. So this is where we are taking ourselves from, and price was sold massively to the downside. So this is how to analyze the market, and this is how to look out for entries in the market like a pro. So that will be all for today's session. Don't forget to hit the subscribe button, like, comment, and share. See you guys on the next one. Bye for now.